My name is Mike Falkender. I'm the Dean's Professor of Finance here at the Smith School of Business, and I am the former Assistant Secretary for Economic Policy at the Department of Treasury, Chief Economist. And so the question is, do I think that the economy is headed for a recession? I don't think we're headed for a recession overall, but it does seem like some segments of the economy are in a recession. If you look at whether it's the surveys of manufacturers or if you look at hiring that's going on in the manufacturing sector, both of those indicate that manufacturing has been in a recession for about the last 2 years. The housing market continues to struggle under a higher interest rate environment. There is some activity going on in construction, but it's largely funded by government money like the Infrastructure Bill and the CHIPS Act. And then we're seeing that there's a slowdown in hiring in the information technology space. But there are other sectors of our economy that are going just fine. So whether that's healthcare, government hiring, social services, leisure and hospitality, those are all seeing nice improvements. And so overall, the economy is moving along, but there are some segments that are struggling. So what does it mean when the Federal Reserve cuts the interest rate, and how does that affect the average consumer? The Federal Reserve sets overnight interest rates at which banks lend to each other and at which banks can borrow from the Federal Reserve itself. Now, this then causes the banks to pass along that change in interest rates to their customers. So a cut in interest rates could mean lower interest rates on deposits. It could also mean lower interest rates on loans, particularly if you have what we would call a variable rate loan. So a lot of companies, when they borrow at a variable rate. And so if interest rates for the Federal Reserve come down, then the companies that are borrowing would also see reductions in their interest payments. For people that have 30-year fixed rate mortgages, it doesn't change the interest rate on their mortgage. And so one of the things that we have seen recently is that hardly anybody these days borrows with what we'd call an adjustable rate mortgage. Almost all of the borrowing is fixed rate. So most people won't see a significant change as a result of the change in interest rates. Where it will have an impact for consumers is on credit card interest rates. So for those people that carry balances, you might be able to see a reduction in interest rates. What effect does the 100% tariff on electric vehicles from China have on the electric vehicle market in the United States? So the electric vehicle market is an emerging technology, and there's been a lot of investment here in the United States. However, China has a lower cost of production, and there is some concern that if China exports quite a lot of electric vehicles here to the United States, that it would crowd out the domestic manufacturing of them. And so the administration implemented tariffs on the imports of the electric vehicles in order to reduce some of the pressure on domestic manufacturers from their ability to profitably make electric vehicles here in the United States. Now, the fundamental problem is that most Americans still don't want electric vehicles. They want your standard internal combustion engines. And so while on the one hand, EV imports are a challenge to domestic manufacturers, the bigger issue is that there's nowhere near the demand that had been forecasted. And so you're seeing a number of domestic automakers move away from EVs and back towards traditional internal combustion engine vehicles in order to meet demand. The challenge they're having there, though, is that with the tailpipe emission standards and the corporate average fuel efficiency standards that the government is implementing, it's making it really difficult for companies to meet those requirements while at the same time achieving consumer demand. And so I would anticipate that eventually the government is going to have to relax those standards because consumers just don't want the EVs that would be necessary in order to meet those requirements. So how does the expiration of the 199A deduction affect small businesses? So for a little bit of background, in 2017, the Congress and the Trump administration enacted the Tax Cuts and Jobs Act, or what's sometimes known as the Trump tax cuts. One of the provisions in that was a pass-through deduction for small businesses. So the idea was that the corporate income tax rate got cut in that provision in order to make us more competitive with other countries. So we had the highest corporate income tax rate in the world, and the idea was that if we want multinationals to be located here in the United States, we should have a corporate income tax rate that's similar to other industrialized nations. Now, if you're cutting tax rates for corporations, there are a lot of businesses that operate as pass-throughs. So sole proprietors, partnerships, S-corps. So there are these other business structures where their taxes are paid based on individual rates. And so what they did is they said, if you're a pass-through business for tax purposes, we'll also give you a deduction in order for the rate to be more competitive with the corporate income tax rate. So if that rate were to expire, then what you would likely see is that small businesses would be at a further competitive disadvantage with large corporations because the corporations would maintain their rate. That the corporate income tax rate does not expire. The 199A deduction, which is the small business pass-through deduction, it does expire. That increases the wedge between the tax rate that small businesses pay versus large companies, and so that would tend to disadvantage small businesses. What are the pros and cons of green energy tax credits? So the benefit of them is that it would encourage movement towards green energy, so things like wind and solar as sources of power. The cons against them are that they are high-cost sources of energy and they're what we would call intermittent energy. So if you have something like nuclear power or if you have a natural gas facility, that can run 24 hours a day, 7 days a week. Whereas if you've got a wind farm, it only really generates electricity during times of wind. If you have a solar farm, it's only going to generate electricity during times when the sun is shining. And so it's intermittent. It's not providing that electricity all of the time. And so part of the challenge that you have is if we move our electricity grid towards intermittent sources of power and away from baseload power, then it creates the potential for there to be greater brownouts or greater challenges meeting the electricity needs. And so the problem that you have is that if the sun is not shining or if the wind is not blowing, you have to bring on other alternative sources of power that could be still even more expensive. And so as we think about what does the energy strategy for the future look like, we need to recognize how do we provide baseload power in order to meet the constant electricity needs? How do we couple that with the environmental components? The other thing I raise on this issue is that many of our global competitors, China in particular, are not moving towards significant amounts of their power coming from green energy. They're opening approximately one coal-fired power plant every week in order to meet their electricity needs, and they emit about 2.2 times the amount of carbon emissions that we do here in the United States. So the other challenge is that if our global competitors are providing low-cost, reliable electricity production for manufacturing that takes place in their country, whereas we have higher-cost, unreliable power generation here in our country, it's going to make it even more difficult for manufacturing to return here to the United States.